Okay, so initially, just to give you an idea, we'll talk in this session of an international, I think, from an international angle, and then we'll bring it all to the MENA region when we have him later on with us on a panel. But first things first, you are in the banking sector now, but you studied neuroscience, so you're a neuroscientist initially. How did you make that jump?
Yeah, it's an interesting journey. Again, just first of all, thank you very much for all joining us today. I was here yesterday. It was a great day of content and looking forward to today. And thank you, Mayor, for introducing me. And I think you've done a great job over the last day or two. So the journey, so I actually started studying medicine. And I actually took a neuroscience bachelor's as part of my MBBS. And I finished it off as a neuroscience degree. I didn't want to go and be a doctor. I didn't want to spend all my days in a lab. And I was looking for, what's my career choices in terms of something dynamic where I could actually bring in all the skills and knowledge I learned during my neuroscience degree. And the kind of use of technology, and that was kind of around year 2000, was actually a really interesting place to be in terms of how it was changing how organizations behaved, how people adopted technology. And you only have to see what's happened over the last 18 years in terms of how people have adopted technology, how it's influencing us on a day-to-day basis. So the psychology of use of technology and how people interact with technology, there were kind of more synergies that more than you'd originally expect in terms of kind of, understanding how the brain works, understanding the psychology of people through to actually how people use technology today. I like the dynamic nature of kind of how technology, especially in the financial services sector, it allowed them to be more dynamic. So it's been an interesting journey. I've enjoyed it.
So do you agree that banking is more interesting than medicine? Clearly, you're all bankers here, so probably. Let's talk about fintech and what, in your opinion, has been the most significant fintech-related development in the whole industry?
So I'd kind of split it into three parts. One, if you think, everyone focuses on the technology, right? So the technology component is just data, right? How much data we have, how we can use data, how we can analyze data. So the whole data piece in terms of mining data and how banks use data, and then moving towards a kind of open banking. So I think data has been an absolute game changer in terms of why fintech is so popular and why it has so much promise. But I think a couple of other components outside of just direct technology component is the culture. The culture has changed. People's attitude to technology, people's attitude to embracing technology and changing the organization and driving change. A simple example is if you look at a company like BBVA, Spanish bank, how they've gone from 10 years ago being very kind of where they were positioned brand-wise to how they digitalize their business and focus on the customer journey. That shows you that organization has gone through a massive culture shift in terms of how they use technology and how they use it to interact with their clients. And then the third component in terms of what I think is driving, has been the biggest catalyst in terms of the success of fintech today and we talked about it yesterday, is the collaboration. I think, I don't remember a time where you've had the whole industry, various industry players collaborating, having a conversation, open conversation, whether it be, we've heard from the regulators, you've got peer banks collaborating, right? So especially in the investment banking space where I come from, I don't remember a time where actually banks got around the table and talked through and shared their experimentation journey. So I think the collaboration component is huge in terms of where we've got to, and is a really key ingredient in terms of where we go. Without collaboration, I think fintech will probably struggle to deliver on the promise.
How important is it to look at startups in the fintech industry and how you were talking about collaboration, how would major banks collaborate with those small startups in order to drive fintech? Yeah,
that's been really interesting over the last 5 years, because I think the narrative 5 years ago was, look, the fintechs are coming to eat our lunch, taking our jobs, they're going to disrupt the banks. And thankfully, the narrative has moved to actually more one of collaboration. And I think, a lot of the banks have been through a journey in terms of how they outreach to the fintechs, how they work with them, how they bring them into the organization. And I think you have various different models. So a lot of banks have an incubator, a lab program where they actually bring the fintechs in, they select fintechs, and they kind of almost house them within their banking environment, so they're close to their stakeholders, they mentor them, they invest in them, and that's worked well. And I think the other advantage to that is you've got a bunch of entrepreneurs sitting in your building who, without a doubt, are going to influence your culture. And then
how would they influence your culture? The whole culture of the bank?
Yeah, absolutely, because I think banks maybe 15 years ago were seen as very dynamic places. But I think that in terms of the evolution, they've kind of flatlined in terms of how dynamic they are, how entrepreneurial they are, how much product innovation happens. Just because if you think about it very simply, over the last 10 years post the crisis, you've had so much regulatory burden we've had to deal with. You've had various issues in the industry, and that's distracted people away from kind of being the natural innovators that we were once. So actually, if you bring these fintechs in who've got a different perspective, very entrepreneurial, they've got new ideas, they're allowed, that's their job, right? So banks and people working at a bank, the encouraging of innovation, new ideas kind of really flatline. So you suddenly bring people in who just have a different perspective, come at the problem in a different way, and bring that entrepreneurial flair in terms of actually challenging status quo. So I think culturally that's good, and then also that dynamic nature of the fintechs as well, along with the kind of big juggernaut bank, has been a good mix.
So in context, it's a good thing to have them.
Yeah.
How do we get them to come to us?
Yeah, so I think there's lots of accelerator programs, as well as the banks having their own labs and incubators. There's been industry accelerators where it's kind of that matchmaking of fintechs.
Aren't they, many of the startups might be afraid to approach major banks or major corporations. They're worried about either their technology or being bought out and...
Yeah, I mean, that's true. And I think accelerators probably 5 years ago were the matchmakers. It's almost bringing together, doing that use case match of, hey, come and meet, Joe Bloggs at X Investment Bank. But actually, that's changed for that. The accelerator model is kind of, dying down for two reasons. Because one, banks now have a relationship with fintechs, right? That this standoff between, hey, we're an investment bank or a bank and you're a fintech and we're so different is kind of gone. There's a lot of interaction outside of the accelerators. That's number one. Number two is a lot of these fintechs are now launched by veterans from the industry. So people who've done 15, 20 years in the industry. So they have already a Rolodex, a black book of contacts. And actually they've worked in the industry, so they don't feel afraid to actually reach out and work with the banks, right? So those two reasons, I think, there's just much closer interaction, and the accelerators, we don't need that matchmaking anymore.
You spoke about the accelerators and the incubators as well. I would like you to tell us about the Startup Bootcamp that you lead as well in that direction also.
Yes, the Startup Bootcamp, I think most of you probably know, is a global accelerator. I was on the mentoring board on the Fintech Startup Bootcamp in the UK. And again, that's a perfect example where, there's a selection process, picking fintechs that we think have the most promise, and then putting them through a 3-month program to mentor them, develop them. And those two pieces are the most important, is mentor them into being entrepreneurs, understanding how to go to market, but then also looking at their product. Because if you think about the lessons learned for fintechs over the last 5 years, is one, know the market you're actually going into. Secondly, and most important, develop a product that's actually solving a business problem. Because too often the fintechs would come into the program thinking their product's great, but actually not being connected in terms of where the market is and where the business problem is. So you'd kind of work with them to tweak tweak the product. And I would act as an industry partner in terms of connecting to the investment banking vertical, for example, which is probably one of the hardest to penetrate, right? Because investment banks traditionally thought we knew it all, and actually why would we listen to a fintech? But thankfully that's opening up now, and we are having some great conversations with fintechs, and we're kind of talking about that. I think it was referenced yesterday, the unbundling of the bank, right? So if you look at your front about value chain in terms of what you do, there's some non-core components that you think, why should you continue to do it? Open it up and actually invite a fintech to come and help disrupt that process, lower the cost, and be more innovative.
I personally think mentoring is very, very important, so that's why I will talk about it a little bit more, and maybe if we can explain the importance of mentorship, and if anyone was interested in applying to this program, what should the steps be?
Yeah, so I think Startup Bootcamp is just one of many accelerators. There's lots of accelerators, I think, in Bahrain and globally. They all have, and some of them are pure play, agnostic accelerators. Some of them are linked to firms like Accenture. Accenture have a big innovation program in multiple regions, including, I think, the MENA region. And then you've got VC companies who have accelerators as well. So they have an application process, and really, what do they look for in terms of selecting a cohort? They look for the people, number one, I think, right? What are the backgrounds? Are these going to be good leaders? Are these going to be good entrepreneurs? And then secondly, the product. Is it solving a business problem, right? Because I think that's one of the biggest lessons learned over the last few years is innovation needs to be business problem led. Is it solving a business problem? Because if it isn't, it would die out very quickly. And then the mentoring component, as I said before, is really key in terms of helping navigate through the industry, through incumbent organizations, talking to them about, developing them as entrepreneurs. So if you actually have veterans from the industry launching a fintech, they're going to be great bankers, but they've never run a company. So, mentoring from that perspective. And then lastly is the product, matching them up with practitioners in the banks to help develop their product. That's really key because financial services moves at a rapid rate. A problem you thought that existed 3 years ago and you've got a solution may change over time. So you need to keep connected with your potential user base. And that's why the incubators and labs I referenced earlier, where you actually, there's an implant within the organization is really key because you're literally having day-to-day, multiple times a day, conversations with your potential user base.
We have some questions on slido.com, so I'm going to take a question now. Because you were talking about innovation, so we have a question about what is the most innovative strategy that delivers value to online and mobile banking clients, in your opinion?
So to me, so I was reading the first question, but yes, I thought the first question was interesting, actually.
Back to it now.
So I think it's data. Data has been the big catalyst in terms of the digital banking, right? In terms of how we use data and what it opens up. Okay, without data, I think mobile banking and digital banking clients will be tougher. And I think all banks and institutions are still struggling with the data problem. If I look at I think there's open banking we talked about a lot yesterday. But if I look at my own organization, there's a big problem in terms of how do we really mine data. We have lots of data about ourselves, about clients. Are we mining it effectively? Are we extracting the insights? Are we being predictive? Are we developing products on the back of that data? So I think we've made good strides, and we've actually, I think someone said it before, data is the new oil, right? In terms of how the companies in terms of market cap has changed, right? But we need to capitalize on the data we have, and actually the most important thing is deliver value to clients, right? Because we talked about it before. Privacy is a big issue, right? But it's the balance, and I think what's been in the news around Facebook is key. The balance between privacy and personalization, right? Clients are happy to give up their data, but they want value back. And if you're not delivering that hyper-personalization, they're not going to be ready to give you more data.
We'll go to the first question that you found interesting. A lot of studies suggest digital transformation is 10% tech and 90% culture. What are the 3 things that successful banks have done to address the 90%?
Yeah. I mean, first of all, I broadly agree with that, right? Because everyone, when they think about innovation, digital, they go straight to the technology. I think a lot of the technology has been around for a while. And actually the technology, I think, is the easier piece, right? To me, it's about thinking about a business problem and then deciding the technology or the tool set you're going to use to fix that problem. In terms of the 90% culture, I think the banks have done a few things. Some successful, some it's more kind of lip service. So I think the first example is they've built those outreach programs with those startups. They've lived and breathed that entrepreneurial kind of culture, and bringing it into the bank and working with them closely, you know, that's gonna really develop the organization culturally. Secondly, I mean, you know, and this is an example probably of one of the strategies which I think was more lip service is, you know, you have a lot of the executives going out to the Valley, meeting startups, getting immersed in that, and that, you know, at the board level, you start getting that change of culture, and it almost becomes like we need to be seen to be innovative, right? So I think that's changed the culture and the focus. And then the last thing is, you know, I think they need to remain competitive, right? So the digital channel, whether it be cost, whether it be competitive advantage, they need to embrace it, right? So I think those are the three things that's really driven the 90%. But I think we've still got a long way to go, because a lot of it has been innovation theater, and we need to actually deliver and solve business problems. You know, if you step back, if I was looking at the London market, whether it be, you know, retail corporate banking have made big advances. Investment banking slower in terms of coming to the table. But even if you look at banking generally, have we solved big problems quickly enough? If we compare ourselves to the challenger banks that have got less bureaucracy and more agile, they seem to be making bigger strides than some of the more established incumbents. So I think culturally we need to be faster. You know, we need to have better decision making. The banks need to understand their innovation funnel, where are the actual problems that sit in the organization, what are their sweet spots they're going after, what's going to solve a business problem, what's going to drive alpha and drive revenue, and then engage with the fintech innovation ecosystem on those problems. So it's almost like funneling the conversation, and that will drive accelerated results.
But there's also the problem of regulation in that case. Big banks, major banks, you were talking about smaller banks being more agile maybe, but big banks have this huge issue about regulation and worry and security issues.
Yeah, I mean, it's ironic because when people talk, hey, we're worried because we don't want to take a risk in bringing a fintech in. If we have a blah, our regulator's going to be on our back. The irony with that is, and we talked about this at length yesterday, is the FCA and what they're doing around with their sandbox. They're kind of, you know, they're leaders in that, right? And you know, when I talk to the FCA and I say, look, you know, we still, you know, it's almost a risk paradox, right? So we as investment banks, we trade risk all day long. That's what we do. But then we're worried about bringing a fintech in because there's going to be some blow up, and actually, you know, we're worried about the regulators. The regulators are fully embracing this innovation, fintech, and they're saying to the banks, if you've got ideas, let's have a chat, right? Let's